Good morning. Um, I think the last maybe 20 years in the art market's probably seen more changes in the infrastructure and the pattern of trade than we've seen maybe in 100 years. That we've been through a couple of major recessions and recoveries in that period. And I think we've ended up probably now in quite a different trading ground for dealers than it was maybe back in the 80s. Some things are coming around again, but it's quite a different place at the end of the 80s. I think the art market definitely doesn't move as fast as some other markets, financial markets and some others. And some of the trends we're seeing have been, we've seen them coming for maybe 20 years or more. At the same time, it's an unpredictable place and it's quite difficult to forecast. And I think given that people from my kind of background have been notoriously bad at forecasting anything, I slightly backtracked a little bit on the title, and I've called it Present and Future Perspectives, because I think that's all we can do. We can look at what we've got, see where it's going, and try and get some perspective on what happens next. So I'm not going to give a definitive answer of where it's going, but just look at some key themes. What I wanted to cover very quickly today, and I hope I can kind of get through it, but it's hard to cover everything. It's just looking at the global market just give you some context and see what are the bigger trends. And I mean, I look at this from a very macro picture, so it's very different from all of you that are dealing at the kind of coalface and working in the micro level. I want to just look at some of the big trends in wealth and how the market's shifted, and which sectors have really kind of come out. Obviously, I'll focus on contemporary because it's more relevant to the audience today. And look at how the market's become a bit polarized. But I want to spend the last little while looking at dealers' business models and what these big trends have really meant to the models that they work under. And this is based on the research I've done, always as an outsider looking in. I did some research for Sanoa, and as Georgina mentioned, I do these reports every year where I talk to a lot of dealers and do a very big dealer survey. So it's based on kind of the last few years' research. And I want to look at the changing structure of the art trade and what impact that has had on dealers and things like the auction dealer kind of divide and that kind of thing. That's what I'm hoping to get through. Just to offer a bit of perspective, looking at the last few years, I think it's been an interesting period because it's been quite mixed for people. Some people doing very well, some people doing not so well. And I think the growth and the distribution of the market as a whole is definitely tied to what's happening in the economy. And it's obviously here in Spain and where I'm from and in quite a few markets, it's been a rough ride for the last few years. And that definitely has filtered down into the art market. And we've seen quite cautious buying and selling to some degree in some sectors. You can see obviously the pattern from 2009 when the market hit a low point, and it's recovered very well in 2010 and 11, driven mainly by fine art over decorative art and antiques, and driven by the rise of China in those 2 years. And then last year the Chinese market slowed down quite considerably, so that sort of dragged the aggregates down. I do these annual reports, and I finished the report at the end of January, so it's a little premature for me to say anything about 2013. And I guess this week and the next couple of weeks are going to be very telling as to how these big aggregates will be. But I think definitely what I can say without revealing anything is it's not going to be a big up and down. It's not going to be a huge boom or a huge contraction. It's this very moderate thing we've seen for the last few years, and it's really a kind of statistical thing that some things are doing well, some things are doing bad. You put the two together, and it's more the aggregate you get is more subdued. So it's on the ground as well. You're talking to some. I just came back from a couple of weeks in the States, and you're talking to some dealers in New York, and they're saying business is better than ever. They've never done so well. And you come back and speak to some dealers in Europe, and they're still really struggling to get over the last few years. So it's a mixed bag, and you put that all together, and it's a little bit more subdued. Obviously, looking back over a longer period, you can see the phenomenal growth. That's been the biggest thing that has changed the market, is the phenomenal growth. I mean, this chart starts at the end of the last art boom in the end of the run-up to the 1980s. That was its highest point it had ever reached, was about $27 billion at the time. And this was the Japanese were in the market, and kind of, I'm sure you all know the story very well. And then within the space of a few months, the market was wiped out. It lost nearly 70% of its value and reached this historically low point of just under 10 billion. And you can see that just the massive growth since then. I think what's most interesting about this is the the speed of recession and recovery then versus now. If you look at this graph, it took probably about 15 years for the market to recover in the 90s. There was a bit of recovery, things started slowly coming back, but it didn't reach the same level till probably 2004, 2005, so it took nearly 15 years to get over what happened in a couple of months, whereas the 2009, we were back straight away in 2010 and 2011. And there's various reasons for this. I mean, one is that it's the global nature of the market has changed. I suppose the Japanese left the market and kind of virtually disappeared, whereas the new buyers from China and from other parts of the world have had a little bit more sustained impact on the market, and they're still around. I think another reason is that the high-end buyers didn't really disappear in 2009. The market went down, but as we all know, it's a very supply-driven market, and it depends on what's being sold, and particularly at auction, but also with dealers, it depends on what people want to sell more than anything. And it was probably perceived as not a very good time when the world was turning upside down. People were going bankrupt and getting redundancies and things to buy or sell. So there was more of that than anything else. I do think, and this might be, you might think I'm overstating it slightly, I do think there was a slightly practical component to it as well. I mean, if you look at the recession, it had low interest rates and the banks were in crisis. There wasn't that many great places to put cash in a safe place. So I mean that it did, and I know from people I've spoken to, they did feel that art was a safe place, and not necessarily an investment or anything like that. I'm not trying to oversell that angle of it, but it was a safe place to hold cash when you didn't want to put it in the bank and you didn't want to put it in the stock market. So I think that did help the market as well come back quite strongly. But I think the speed and the longevity of any recession is all about confidence, and particularly confidence on the part of sellers. As we all know, the buyers are probably always there if you can get the right things to. You can sell to them at any price if you can find the right thing to sell to them. So it was about selling, and I think particularly the auction houses were very determined in 2010, 2011 to make sure it didn't fail. So very managed process. It wasn't an accidental recovery, I don't think at all. Obviously, the big thing, and I'm sure you're all very aware of these big trends, but the big other shift has been in the geography of the art market. I mean, this is back in 2004, and you can see how dominant the U.S. was. Nearly half the value of sales, this is auction and dealer sales, took place in the U.S. This is sales on the ground. It's not where the buyers come from. It's where the sales take place. And the UK and US had like nearly 3/4 of the market, and that was quite typical from the 60s. Obviously, go ahead to 2012, and you can see the huge impact that new markets, and particularly China, has had, and that the US has shrunk back, even though it was on top in 2012. It shrunk back, and if you look to 2011, China was actually the largest market by a fraction. And I think that these fractions are slightly irrelevant. It's the fact that the duopoly that London and New York have has completely changed, and the way the market looks in that respect has completely changed. And it's a new economic infrastructure. It's a new infrastructure of wealth, and that is feeding down in various ways. For some markets, such as Brazil and Russia and India, to some extent, it's more about them buying in traditional centres. And buying some art at home, but buying more in London and New York and the big centres that are there already. And for China, it's emerged not only as an important buyer, but also an important seller. I'm not going to go on too much about China, because I know it's the subject of the next discussion, but just to really show the massive growth in the period from 2004 to 2011, there was, I think, was nearly 650% or something growth, or 350%. Sorry, doubled it, but it was still pretty phenomenal. And then it came down a little bit last year, and I think this year, I mean, there's very important sales in the second half of the year in December. So it's early days to say as well, but again, it won't be huge growth, and it won't be a huge loss. It'll be more, hopefully, more stable growth, flat or stable, let's say. But I think what I just wanted to show in the case of China, there was a bit of a discussion when I was talking to Conrado about what the content of this lecture about bubbles, and what are we going to do about the bubbles in the art market, and how do you face these bubbles that happen. And I just wanted to take a step back, because I think a lot of people were talking about bubbles in the Chinese art market, and just kind of describe what a bubble is. And I suppose very briefly, this is my kind of economist's definition of what a bubble is that it happens when prices rise higher than that can be explained by fundamental values. So there's what we call this irrational exuberance in the market that you might hear kind of quoted. This, people are irrationally upbeat, and this kind of wishful thinking, I suppose, makes people buy assets simply because they can sell them at a higher price. So they buy them just because they think they can sell them for more, not because they think that's the actual value of them. Um, and this is what a lot of people certainly thought happened in Chinese contemporary, and what happened to some extent in the Chinese market as a whole. It was exhibiting some um, bubble-like behavior. But certainly in 2007, 2008, there were speculators, Western speculators, buying Chinese contemporary, thinking they could sell it back to Chinese as they became wealthy, which didn't really hold, as the Chinese, that's not the focus of the Chinese market at all. And I suppose the biggest danger with this kind of speculation in the market is that something happens, like there's some kind of catalytic event happens, whether it's a real event or whether it's an imagined thing, it doesn't necessarily matter, and there's some kind of rush for liquidity. And we saw that in 2009, people trying to get out of the market at the same time unsuccessfully. It creates a rush for liquidity and the bubble bursts. And this happened to some degree in China, I think, a little bit last year, because there was a lot of speculation in the market, and a lot of art funds were closing down or trying to get out of the market at an inopportune time. And I suppose the biggest problem for dealers in the art trade in this kind of bubble-like atmosphere is that the notion of kind of real values becomes a little bit unclear. I suppose everything gets dragged up for a while in a bubble. That's the thing. Even the stuff that's not really doesn't necessarily warrant it. And I think what happens when this so-called event happens, the new and inexperienced buyers in the market get really scared off, and then they leave the market. And what's left in the market is the longer-term collectors that are doing their own thing, and they're not in really any danger of losing money because they're not cashing out in any time soon. So it kind of shakes out a lot of the, not just speculators, but newer, nervous buyers that have come into the market. And this is why you can get this corrective recessionary period that follows. So, we'll see what happens in the next couple of years in China, but it certainly is looking like there is that kind of corrective period. This is just sticking with China for a second, just to show that it was a supply-driven boom. I mean, China's all about it's not just demand coming from China, it's the fact that they have a lot of things to sell. And it's the same with what happened in 2012. The volume of things sold did go down. I kind of discuss this a lot because I just find it quite fascinating myself, the huge amount of buy-ins in the Chinese market that have actually expanded from about a third in 2004 to over half the market that sells in the auction market in China doesn't sell. And I'm discussing the auction market mainly in China because it really dominates. It's about 70% of the art market. And a lot of people just saying that it was really a victim of its own success, and the fact that people were getting such high prices that people tried to sell a lot of things, and some of them were fakes, some of them were not such high quality. People were kind of throwing things onto the market. There was a wash of stuff coming onto the market, too many items in a lot of people's opinion. And what they feel that a lower volume of higher quality works with better kind of provenance would certainly lead to more stable growth in the long run. So this is hopefully the corrective period we might see in China. But the fundamentals are still very strong. I mean, there was other reasons besides the kind of speculators coming out of the market, and a lot of that was to do with the government looking at the market more for tax evasion and dubious kind of practices. The whole economic situation in China slowed as well, and there was a lot of fiscal and monetary kind of constraints on liquidity and things like that. So there's definite reasons why the market slowed, good reasons why it slowed. But the fundamentals for the long term are still very strong. The wealth dynamics in China are still very positive. The number of affluent households in the country is increasing year on year, and they're very confident that, I think it was McKinsey did a study of financial confidence in China, and the average person thinks that they're going to be a lot richer in 5 years' time, which is very positive for things like art and luxury products. It means they're kind of aspiring to bigger things. And these wealth dynamics really do feed into the market. If you look at the four biggest markets there, over half the population of high net worth individuals live in these bigger art markets. And the kind of main art buyers, I suppose, at the high level are these stereotypical high net worth individuals that participate in other financial markets around the world. And they've grown considerably over time. In the last 10 years, I think there was about 7 million 10 years ago. There's 12 million now worldwide. And they've obviously increased their geographical spread. But it's important to look at places like Japan on this chart, and Germany, because having rich people doesn't necessarily, obviously make an art market either. And a lot of the new buyers are buying from traditional centres, and there's a lot of reasons to believe that will continue also. I just want to take a brief look at some of these wealth dynamics, and these are a little bit different from the statistics that Alan was showing yesterday. This is the percentage of wealth as a percentage of the population. So it's looking at how many rich people there are in terms of the numbers of people in the country. And I think that these in these kind of BRIC regions, they've become they've come under the microscope because they've obviously been hit slightly less. They weren't immune to what was going on over the last few years, but they've maybe been hit less severely, and they're recovering a lot faster. And they've been buying art quite rapidly, but still the art buying is driven by a tiny portion of the populations. And if you look at the high net worth individuals, make up less than 0.1% of the populations of these countries, and it's very, very marked in places like India and Russia, where over 90% of people earn less than 10,000. But it's the same kind of story in China and Brazil. They're changing a little bit quicker. Another reason they've grown in interest is despite the fact that there's this huge inequality, the middle classes, unlike the middle classes in the US and things, the middle classes are actually increasing quite rapidly. And this is the growth in GDP per capita in 10 years. And you can see that in all these BRIC regions, it's growing at over 200%. So the average growth rate over 10 years in average incomes is growing at a huge amount. So the crux of it is the average person in China still can't afford to buy art, but with their average incomes growing at 400% over a 10-year period, it's a very positive sign for the future of the market there. And that who knows, they might not buy art, but they certainly will have the capacity to do it in future, and it is an area of interest. So they have strong luxury leanings. All the research has shown that already. So it's a positive dynamic for the art market. And again, I don't want to dwell on too many of these statistics, but again, it's just to show that you can see China's moved up the league table so much in terms of billionaires and millionaires, but still, it's the population, the average person in China their average income is less than half of somebody in Poland or even Brazil, and probably about a quarter of somebody in Spain. So it's still way down the list in terms of average incomes, but moving up the league tables fast. Just very briefly to see why these high net worth individuals are of interest. What do they buy? I think the research has generally shown that they allocate up to about 10% of their investable spending on investments of passion, or I've seen them called all kinds of things, treasure assets, investments of passion. It just means all these things like art, collectibles, sports teams, all these kind of various things. And I think what tends to happen in countries that maybe have high inflation or quite volatile financial markets, they tend to actually have a higher proportion invested in these kind of assets. So if you look at the Emirates and stuff, it was 18% was the average. China was about 17%, Brazil 15%. Whereas if you look at the more mature markets like the US and UK, it would be 7 or 8% invested. And that's quite a generous estimate. In 2013, this is the first quarter of 2013, jewellery and gems were the most popular, and art was in third place. And luxury collectibles, which is antiques and coins and things like that, was the second highest category. I think art has been very interesting to watch in the fact that it's 17% now, which is a very high share. But in times of financial crisis, the share allocated to art tends to go up. So if you looked in the middle of 2009, the allocation to art was something like 25%. So it's obviously something that people cling to in terms of having long-term tangible value. And I think high net worth individuals are much more focusing on luxury purchases as things that they should consider in a more financial sense. And they're especially if you're going to devote a high amount of money to something, you want something that has some tangible value over time, long-term tangible value. So they are viewing things in a bit more of a serious manner, and art and antiques have come up on top. So just to kind of conclude about wealth and these emerging markets, I suppose that the emerging markets have been very important to the art market in terms of buying, and certainly in China in terms of sales. And they're certainly been highlighted, I think, because of the difficult period we've had economically over the last few years. But I think it's important to qualify their significance as well. As I said, having a lot of money in a country or having a lot of wealthy people doesn't necessarily produce an art market. And I think bar China, most of the millionaires from Brazil and Russia, and they might buy some local art, but they're buying art mainly from London and New York. And there's many reasons why these markets are going to stick around for the long term. One of the big reasons is they have this upper middle class that doesn't exist in these countries, and they're very important in the middle and higher ends of the market. They have all the infrastructure, the important infrastructure that goes with a market, in terms of both the institutions and the expertise and all the ancillary services and things that are, really under pressure now in places like China, the specialist insurers, packing, shipping, all those things that you have to have that go along with art sales. And also, I think probably the most important reason that, places like New York will always be up there is that, it has a really transparent, regulated system, that it's regulated enough to allow a healthy trade, but it is business friendly enough to allow things to flow in and out. And that is in a nutshell why I think New York it does so well year on year, is that the consumers are protected by a really strong buyer commercial code. Sellers are protected as well, but it doesn't do that in a hampering way that sometimes, I'm afraid, happens in Europe. I think a lot is that things that come into the market that actually slow down trade, and people end up just doing things off books more, and the government doesn't get any revenue from them. Whereas in New York, it's so open that there's less reason to lie, I suppose. That's probably a little critical of some regulation in Europe, but it sets the incentive there at least to do that. Just looking at what's done well, I suppose, as I said, the market's been tied to what's happened economically. And I suppose in other markets over the last few years, we saw this kind of flight to safety, I think it's called. People were buying more bonds or more kind of blue chip stocks and that kind of stuff. And the same thing happened over the last few years in the art market. So just this is a very brief rundown of some of the kind of high auction sales that are verifiable. And you can see there the very well-established brand name artists were the ones that were the kind of big ticket items. You have the kind of blue chip sort of artists there. It's kind of a retreat to safe things, I suppose. And you have people like Barnett Newman, which I know somebody was writing about the fact that this was risk had come back to the market, but this is a kind of very low risk thing, and the fact that it just for me was a sign of the importance of scarcity, I suppose, in the art market more than ever. When you get an artist that's much less prolific than some of the others, it can really drive activity more than anything. But what really stands out, I suppose, is the importance of post-war and contemporary art in this bunch of high-value sales. It's certainly become the leading sector. Over 40% of sales worldwide are, in terms of values, are in the post-war and contemporary sector. And together with modern art, it accounts for about 70% of sales. And that's vastly different from the 1980s, when it was a tiny kind of high-risk area that only dealers and some very, sort of cutting-edge kind of collectors were looking at. It's changed completely now to being the kind of main low-risk area to invest in. And again, this is just the growth, and it's like an exaggeration of the growth that happened on an aggregate level. You can see it was one of the fastest growing in the boom, but as the most kind of speculative as well, I suppose, of the fine art sectors anyway, it was probably the most susceptible to what happened in the global financial crisis. So it took a huge dip as well, but really came back very strongly and has hit its highest ever recorded level last year. And this is just auction sales, so you could more than double that figure to get the value of dealer sales. And I think it's going to be another very strong year again. It'll be the leading sector, no doubt, again. And just to qualify, because I know there's been a few statistics and it gets very confusing when these are on. The post-war and contemporary that I talk about here is probably different from art prices. Contemporary, they define contemporary as artists born after 1945. Post-war and contemporary is a slightly bigger sector that looks at probably artists born after around 1910, plus some artists that are key to the sector. So I've defined it in a slightly different way. I know it does get sort of confusing when there's too many definitions. You can see here, I've just done some indices that the contemporary sector really outperforming other sectors and way outperforming financial indices as well. And obviously these indices are quite limited. This is an index from ArtNet data. It's looking at their top 50 artists, and so that's a limitation in itself. It's only looking at certain artists. I think a limitation in all these indices that nobody really goes on about too much. So there's a fundamental flaw in the indices is they're only obviously looking at successful sales. So if any of these artists sold and there was a buy-in, it's not registered in this index. So it's not a risk-adjusted index in any way, shape, or form. It's only auction data because it's the only data that we can get micro-level data on, and it depends on the methodology you use. I mean, this one is quite a good methodology. It's a cap-weighted index, and it's comparing like with like, at least with the financial indices, but they're limited. And I don't want to drone on too much about data and indices and things today because it's a subject very dear to my heart. But just to say fundamentally, the problem isn't with the indices themselves. It's the problem. The problem is with the fact that all financial models and all economic models are built on the basis of a number of set assumptions. And if you don't understand the assumptions or you don't use the assumptions, you're not using the data in the correct way. So it's not, the indices are built very well and they're fine and they're difficult for art, but the methodologies are fine. It's the way they're interpreted, I think, is fundamentally flawed. And that goes for all metrics in the art market. I think it's not the metrics that are the problem, it's the interpretation and not understanding the kind of the assumptions that have to go into building these things in the art market, and thinking that they can some way be used as an alternative to qualitative analysis and subjective, people's judgment and things like that. I think is a fundamental flaw in them. They can always be used in a kind of a supplemental way. So with all that qualification, the reason why I wanted to show the indices was that just to show you within post-war and contemporary, it's been quite a mixed bag of performance as well. And I think what I found from even talking to kind of big collectors in the US and things over the last trip I did there a few weeks ago is that I think at the high end, people will only really want to pay those huge sums for people that they think are going to be around for 50 or 100 years. So there's people that are popular, but they see as going out of the market, and then they're not going to be really that. They don't have the longevity that some of the big stars have with the historical footprint. And it's not that they're hugely famous; it's just they think they will have a very important place in history. And I think that we've seen that in post-war and contemporary. If you look at the difference between the kind of Damien Hirst index versus the Basquiat's and Rothko's and things like that. So it is a mixed bag even within post-war and contemporary. Despite those high value sales, obviously most people's businesses for dealers and even at auctions are not in that high end. Most of the sales that take place in the art market happen at a much lower level. So it's a very polarized market in terms of value. Most of the value is in the high end, but in terms of numbers of transactions, most of it's happening at a much lower level. In the dealer sector, 77% of transactions, this is according to the surveys that I did last year, are for less than 50,000. So most people's businesses are happening at the less than 50,000 end. And it's the same in the auction sector. 93% of all lots, so it's not even more skewed, are less than 50,000. And over half the value of the market comes from 1% of sales, and importantly 1% of artists as well. So it's this thing I think somebody might have been talking about it a little bit yesterday, about the superstar ethos in the art market. And I think auction houses have been quite successful in getting those. It's a narrower list of names, and they actually have been quite successful in getting that list of names to sell. And it's a challenge for dealers, I know, at fairs, thinking, what do they bring that people are interested in. And from talking to some dealers in the US and in Europe to some extent, they're because they can't access that narrowed list of artists all the time, they're re-engaging in looking at more a little bit higher risk areas and going back. And this is kind of dealers at the top end as well, looking at things that would have been perceived maybe for the last 2 years as slightly more risky, which is a good thing, I suppose, in breaking down that thing that everybody's buying when everybody else is buying. It's a very strong herd mentality, particularly with new buyers in the art market. So just for the last few minutes, I wanted to look at what all this has meant for dealers, and I wanted to look at the key trends and how they've shaped the competitive models that dealers are using. And as I say, this is based on some research I did generally, but I also did a study for Sanoa a couple of years ago. So it is based on dealers that deal in older stuff as well. I know it's not all contemporary dealers, but I think it's quite relevant, and it kind of fits a little bit with what Jocelyn was talking about yesterday in the models of what dealers used to do in the kind of 60s and 70s. So I think how dealers' business models have changed. I think most people in kind of 1950s to at least the 1970s were built around the premise of buy cheap, sell dear, whether it was contemporary or whether they were antique dealers. It doesn't really matter. They're the same kind of thing. And there was a lot of certainly for people in older sectors, there was a lot of people with rattling around kind of old homes that had a lot of great art but no money, and there was a lot of people in other locations that valued the art a lot more. So there's very opportunistic, very clever business people during that period that bought up a lot of stuff, and the same thing, kind of got in with probably the right contemporary artists at the time, and were very hugely successful, and created great kind of dealers and collections from that period. I think things probably fundamentally changed from the 70s to the 90s. The supply and demand fundamentals changed, as did the kind of balance of power in the art market. Obviously, the big thing was auction houses. Dealers began to compete with them directly, both for buyers and particularly for supply as well, and who they worked with and what works they could get. So quality works in some sectors started to dwindle, and people found it more tough to access them. And I think what we've ended up now with in the current period is the basic premise of most businesses is based on kind of finding and accessing things. Whether they buy or don't buy is nearly done on a case-by-case basis with a lot of the dealers I spoke to. And then they're adding services and expertise and selling in a marketplace where things like prices and demand and things are determined in a competitive marketplace rather than being based on what they think they can price at, or the margins determined by themselves. These kind of things are determined competitively. So a lot of competitive strategies have shifted to access and adding services and things like that. And competition is a little bit more head-to-head. Along with these changes in the approach to business, the degree of specialization in the market has changed. And this was from the results from the research I did for Sinoa, that I suppose unlike the more diversified auction model, they've always kind of reminded me of academic researchers, that they have a kind of a strong vertical presence. They have networks and communications and access and things in a vertical kind of designation. And they develop strong personal and sort of institutional knowledge in a particular area. And obviously that's dependent then on the success of that particular area and that doing well. So it's a higher risk model than some of the diversified auction houses. But despite that, there was indications that dealer specialization is increasing over time. And this includes specialization not just in sectors, but in things like, price areas and things like that. So in older, more mature markets, there's greater specialization. And in larger art markets, there tends to be greater specialization too. And you can see that, for example, I'm just looking at the US now for this current TFAF study. If you look at some smaller cities in the Midwest, there's more general dealers that sell a few different things. Whereas if you look at New York, things are cut by, sector, price. Everyone's got their sort of smaller niche. So it's become more specialized, but I mean, it must be a financially rewarding strategy for the people that are doing it. And you see in dealers' careers that people specialize more over their careers. So it obviously is financially rewarding. It's not a thing to kind of say is certainly a bad thing in the market. You build up good expertise and sources and buyers and things in an area, so it's good to capitalize on that. There's some interesting people I talked to that are dividing their businesses up into different areas within a specialty. So they're looking at, for example, one very good dealer. Now, he's actually an antique dealer, but I think it's the same thing can hold, has split his business, it's actually in South Africa, into a small, high-end, very high-value antique shop, and then he's got a larger, low-end kind of more design and younger type shop as well. And he basically uses it as kind of an incubator. He can price discriminate, first of all, depending on the buyer, and he uses this bigger, more kind of more friendly kind of shop to get in new buyers, and uses his staff and himself to educate them about the area and antiques and things. And then it's kind of an incubator, and by the time they reach their maybe their 40s or 50s and they're got the incomes to spend, he kind of shifts them along to the higher value shop. So it's an interesting model, but it's just showing the importance of specialization. And I think it's interesting to see what will happen in future. I mean, it looks at the moment like it's getting more specialized, but I would worry that given the shortage of supply in some sectors, this narrow group of artists, everyone buying the same thing, it's going to be challenging for people to keep on specializing. Everybody can't do well in one tiny area, and also there's changing demand from new buyers from everywhere else. So I mean, dealers might have to looking at other areas in order to survive. But I think what's probably the ideal thing that would be done was that you try and look at segmenting the market and looking for areas that are underserved a little bit. And these are in terms of value and specialty and various ways you can segment the market. It's very business school kind of speak to talk about it, but it's about doing some kind of business planning. And I think I spoke to 75 dealers in that Sinoa study. And one of the questions was, have you ever actually written a business plan? And one out of the 75 had ever written a business plan. And I kind of asked them, why you're a small business, why have you never done any business planning? And they're saying, oh, this is my lifestyle. I love this. This is my passion. And that's great, but it's a big luxury. I mean, other small businesses have to do formal planning. So I think it's something that, you're so involved. I think that it's probably slightly second nature what's going to happen, but I think sometimes it is actually very good. But just the process itself of sitting back and doing some kind of formal planning is a good thing. Just even if for the process itself. Dealer channels, I think, have changed. That's another big trend in the market. Obviously, fairs has been a big thing, and the online channel has grown. I know this was kind of talked a little bit about yesterday, and these are some of probably what Anne was talking about, her kind of cliches or her kind of stylized facts that I wanted to just look at. Obviously, with fairs increasing, the big thing is that people are saying the gallery is in decline, the retail gallery is in decline, and that is true to some extent. If you look in like the 798 district and even in Chelsea and places, the galleries there's a lot of galleries have moved out. They're not the young kind of dynamic, real cutting edge galleries that they were when these places started. But and the main reason for that is that the rents were too high, obviously. So it's particularly in the 798 and things, the rents have been put up a few times and people can't afford to stay there. But the galleries aren't disappearing, so I think it's an overstatement to say that they've been pushed out and they've just disappeared into the ether. They're just finding lower cost places to do business. Another problem is, for the retail gallery being in decline is, I suppose, foot traffic has dropped in a lot of galleries. People don't visit as much, and this is talking about people in older sectors as well, maybe not quite as true in contemporary, but I think it is to a certain extent. It's just more difficult to get people out of their homes and their offices, and people are quite happy to buy online and at auction and stuff, but not happy to go and visit a gallery as much maybe as they used to. Obviously, fairs are a big thing, and the market's become this kind of event-driven vehicle. And I think a lot of people were kind of touching on this yesterday, that buyers' loyalties have shifted to the fair itself rather than to the gallery, which is an issue that dealers are facing. Online has made it more important, and it's made people downsize in different ways. I know a lot of dealers because they're selling online a little bit more, they might not downsize physically, but they might have downsized their, the bodies in the shop. They might have, so it's either manpower or size. And then there's other people kind of getting in on the space that used to be owned by the gallery. So there's auction houses doing a lot more private sales. There's art consultants. Now, they might work with dealers, but they're doing a lot of the transaction itself, so they're kind of cutting into what would have been done in a gallery. And artists themselves, obviously, looking into the market more. And some dealers, now this might be again more true in older sectors, but a lot of dealers saying that just the shift in the emphasis on services and value added in knowledge and expertise works against needing a kind of a big space for some galleries in some sectors. And they're saying, I was talking to a kind of an old master dealer, which I know is not that relevant, but he was saying, I'm all around, my business is built on discretion and, knowledge and intellectual values and things like that. So having some kind of brightly lit, expensive kind of frock shop on a main street hasn't added anything to his offering. So he's moved up to a office space, which is equally effective for him. And obviously there's people bucking the trend as well. There's the big contemporary galleries. There's small one-man shops in destination towns and places where the rents are feasible, are all kind of bucking this trend. So it's not necessarily, it's one of those slightly stylized facts that you can make too much of. I think there's a lot of talk about fairs, so I don't want to kind of talk about it too much, but obviously they're central now. And I think just from the last point is that, certainly from my just trip recently to the States, there is this kind of slightly anti-fair kind of backlash from dealers in the States. It's not that they're not going to fairs anymore, but they're concentrating on, where their buyers are, and their buyers are in the US. So why go to Hong Kong to sell to a US buyer? Why not trying to make the fairs more attractive, in the US, which is what a lot of them are doing, and some of the Dealers Association really working on making their fairs the best. And it's a lot of the dealers now consolidating and not traveling quite as much, but still, still attending fairs. And I think we will see more of that, more regionalization in the fair market, where it will become more, there's certain places to sell certain types of things. I think that will continue in the future. The online market, I think, has been important. And again, this is one of the most talked about, I think, recently. I have a lot of people inquiring to me about what's happening with online sales and the online market. And I think some of it is justified, and some of it is a little bit overstated as well, particularly for dealers. I did some estimates recently, and the market was estimated at about 3 billion, so that's 6% of global sales. That's probably about the same as it is on a global level for, the percentage of online sales of over global retail. So it's not that out of kilter, but that includes auctions and collectibles as well. It's just not dealer sales. Obviously, the online channel has been hugely important for dealers in terms of communication and marketing, and it's been kind of a challenge for dealers too, in that it's made things a lot more transparent, and margins a lot more obvious, and margins a lot more tighter. But I think despite all the advances that have been made, some dealers have exceptionally advanced platforms, but auction houses have been way ahead in this sector than dealers, and online kind of e-commerce, as it is in the dealer sector, remains very low. And I asked dealers themselves and collectors why that was the case, and there was various reasons. The market's too subjective. You need it works against kind of anonymous, impersonal online sales. You need kind of advice and touch and feel and that kind of thing. Or even if you have information, you need some kind of intelligent way to sort through it. I think that's a kind of which works against, again, doing it yourself without any advice. Values are too high in some sectors for e-commerce to work effectively, so it's probably worked better for lower value sales. Online sales are generally suited to kind of fairly high inventory businesses, so you can have high inventory in one low-cost location and sell it anywhere you like, whereas a lot of dealers work with a very limited or virtually no inventory. Things like the requirements for guarantees, the fact that dealers' businesses are built around in-person services and problems of buying with an image in terms of scale and even things like condition and things. The need for discretion, a lot of dealers are saying if they have something very exceptional, they don't necessarily want to broadcast it to a mass market. They want to allow themselves to be able to price discriminate a little bit to the people they're showing it to. And some people have been put off by bad experiences, frauds and scams and things. But I think in general, it's just because one very big reason is that the art market is behind. They're kind of lagging behind other industries. And again, that's true, and I think it will change to a certain point. But I think it can be slightly overstated as well. And I personally hope it doesn't change that much. I was at a forum at Art Expo in Chicago a couple of months ago, and it was they were all the kind of bloggers talking about. We were talking about online art criticism more than sales and things like that, but they all were discussing all the exhibitions they'd seen, shows they'd seen, and all these kind of things, and they were all writing critiques of it. And I was talking to one of the girls after it. I'm always fascinated in how people organise their lives, and asking her, she must travel all the time, and how do you manage it with family and everything like that. I'm always kind of fascinated with these things, because you have to, even as a researcher, you have to do a lot of travelling. It's not just dealers that are going to fairs. You have to kind of do a fair bit of travelling. But she said, I don't go to any of these exhibitions. I write about them just based on looking at them on the computer. So I think I think if it went too much that way, certainly for people that are critiquing, exhibitions and things like that have never actually physically been to them, I think is probably the wrong way for the market to be going. So I think this can be slightly overstated, the importance of online. But what is online, and I think just if you want to look at what's happening at the moment, I think the middle market is the key to what's going on. Obviously, the high end, you've got a small number of buyers and sellers. You've got limited supply. Only certain artists are selling at the high end, and the buyers are limited. They're these high net worth and ultra high net worth individuals. So it's a narrow market, and it accounts for a huge bulk of the value of sales, but it's a very narrow marketplace. And there's very little pure e-commerce happening here. It's a huge tool for publicity, the online channel, but it's not served very well by e-commerce. I think at the low end, you've got a kind of a global mass market, and I saw, this isn't my own estimate, but I saw there was an estimate of 70 billion, this market, if you include reproductions and posters and things like that. And that is actually already being very well served. You've got eBay, you've got these old posters, art.co.uk, all these big companies that are serving that market extremely well already. So I think the focus at the moment for the online market has been this more middle market, and the middle market's obviously very poorly defined. It means a different thing to different people, but it's anything from, I suppose, a couple of hundred to 100,000 I would be talking about in terms of these online sales. And this is authentic, original works at kind of normal prices, so in that sort of band. That are being bought by your regular kind of middle class and upper middle class people. Some people have moved up from the lower end in reproductions. They want a unique piece, so that's causing that middle bit to expand over time. And some people, are moving down from the high end that they can't access or afford the prices that are in the high end. So it is a kind of it's a substantial group of its own, but it's growing as well. In the gallery market, I suppose it's tended to a lot of be primary market sales, prints, photography, that kind of thing, and it's a bit more of a mix in the auction sector. And just looking at who's in the market, obviously it's nothing new for online auctions. I mean, Sotheby's did the thing with Amazon originally in 1999. I think it was at the end of the 90s anyway. And both Christie's and Sotheby's are still doing, have relaunched the versions of their online offering, and you can see them kind of gradually moving up the value chain. I just was with Heritage Auctions in Dallas. I had a meeting with them a few weeks ago, and they're a huge online seller. They have 500,000 visitors a month. They're selling at a huge level. They sell art and collectibles, all kinds of coins and things. I think they started out with mainly, but they're a huge online seller. And then there's the smaller companies that didn't have the budgets maybe or size to do their own online version, and they're using these kind of new companies like Paddle 8 and the Art Fact and ArtNet Auctions. ATG Media have quite a few, and some of these guys have great business models. I mean, Paddle 8 have a brilliant business model. I met them recently as well, and they're every single when a sale closes on Paddle 8, every single underbidder immediately gets sent an offering of similar things from that sale. I mean, it's a really good business model. They have, and this is an area where there's loads of supply. It's kind of slightly oversupplied. This sector, it's easy to get access to the material. So every single person that bid immediately gets a kind of a similar thing. You didn't get that one, but here's 10 others like it or something. So it's a strong business model, and they're dynamic companies. And I'm sure Billy is probably going to talk more about this afternoon. These kind of companies, especially in the gallery sector as well. There's companies doing it from their own websites, but there's also all these new companies, ArtSpace, Paddle 8. First Dibs is very important for some of the older dealers in older sectors, ArtSpace, Artsy, all these new companies. And obviously we saw Amazon coming in, and I know eBay have just hired a colleague to look into the high end as well. So I think they probably will relaunch something in the next short while. They've hired someone to look into how they might do that. And then there's artists themselves that have become very important, selling from online, from their own websites, and becoming their kind of own marketing powerhouses, I suppose, thanks to social media. So you can become famous not because a critic says so, but because you're popular kind of through social media. And again, I have to go back to the same forum I was at in Chicago with the bloggers, saying this has made the market really democratic, and the role of the dealer as a gatekeeper is diminishing. And I mean, I think that is true. It's something to be aware of, certainly, that the access can be more direct. But I think it's probably, again, overstated in that, you see something, but you still need an interpretation, and it still needs context and all these things that a gallery and a dealer can provide. And I can't see how that's really done effectively purely online. And you still need to be explained what context that particular piece is and how to interpret it and things like that. So I would be a little bit skeptical of it completely taking over. And again, there's collector sites as well where people are selling directly to each other. So there's a whole range of people working on this middle band. And I think there's a lot of worries over authenticity and provenance and things like that. But it has been focused on lower price points because of that. But I think that the ceiling is slowly shifting up, and I think we will see that over the next 10 years. People are getting more comfortable with buying things at a little bit higher level all the time, and people want to buy things. New buyers especially want to be able able to access things in the same way that they do everything else. So I think it has changed fundamentally, and there's no kind of really ignoring it so much. And I think especially if you look at what's happening to e-retail generally, it's growing 5 times as fast as any other type of retail. So you can't ignore that in the art market either. I think it's something that it's probably not good to ignore. And I definitely think this is a market that always necessitates a physical presence, but I think it'll have to be done in combination with, giving people what they want in the way that they want it, and that should bring online transactions more into focus. So my very last, my voice still holds up, thing I want to look at is just this age-old debate, I suppose, is the other thing of what's happening between dealers and auction houses. And I suppose this has been a key competitive challenge for dealers over the last few years in various areas. And the balance of power, as I said, shifted, I think, especially over the 80s and 90s. I think before the 90s, if you wanted something, if a collector wanted something, they'd go to a dealer and say, can you go and buy that for me at auction? Obviously, people now are more than happy to buy something at auction, whether it's on the phone or online or physically. People are more comfortable with buying directly, and it has shifted the balance of power. And I guess it's this kind of stylized vision of what auction houses and dealers are that is actually breaking down. I mean, there was this idea of auction houses being in the money business, and I think this is why they were very effective at giving guarantees and things like that. But there seemed to be quite impersonal corporate bodies, and you wouldn't deal with the same person over time. They were kind of non-specialized, diversified, and had very high marketing budgets to push whatever different thing came along, and they had probably a lower focus on service and a higher focus on sales. And this was as opposed to dealers who were seen as very specialized experts, small personal businesses, and they had a very high focus on services. But I think the last, certainly the last 5 or 10 years, this kind of stylized thing is breaking down a little bit. And auction houses are the definition of them is becoming a little bit more blurred. They're certainly, obviously, the most obvious thing is the private selling thing, but they're, when you talk to some of the guys that are running the big auction houses, they don't see themselves as in the auction business anymore. And again, it's one of these real business school cliches for anybody that went to did any kind of business course. It was, why did the railways fail? It's because they saw themselves in the rail business instead of being in the transport business. And this is the same with the auction houses. Have taken that really on board. They're not in the auction business. They're, in the art, luxury, or people's needs business. They're in some kind of, I can't, say exactly what they're thinking, but they've really taken it on board that they're not in the auction sector anymore. They're serving people's needs in whatever way they need, and they're right, because what people want hasn't changed necessarily at all, but the way they want it, how they want it, where they want it has changed. So they're changing their businesses to suit that need. So it's just a danger to get stuck in this kind of slightly old-fashioned model that it's us and them, because it's not the same debate anymore. Despite all the power that auction houses have gained, I mean, I asked dealers themselves what gives them, why do they still have competitive advantages, and these are the kind of things that they said, and this is from collectors and dealers as well, and these are the kind of things that keep dealers still very relevant and important. Recourse is a big thing, especially with maybe smaller auction houses as well. There's an idea that it's not, you don't get the same kind of level of guarantees or kind of after-sales security that you might with a gallery or a dealer, and it's not so much that something might be fake. It's that the onus is on you, I suppose, to know the difference if you're buying at auction, whereas the onus is on the dealer to sell you something appropriate if it's a gallery. Expertise, obviously, from being these kind of like an academic researcher, from having this vertical segmentation of their businesses for such a long period of time, they would have a lot more expertise. And a lot of dealers say you can't really get that expertise unless you actually buy and sell in an area. You can't get it from reading or from just being an expert that's paid a salary. It needs to be the focus of how you make a living to really get expertise out of it. Discretion. Obviously, people don't want to know how much they're paying or when a work is being bought and sold, or if it's not selling very well. And that was always offered by dealers, although this is an area that the auction houses are eating into. It was a big competitive advantage that dealers had and maybe don't have as much. So it's something that needs to be kind of looked at. Access, obviously, from having a lot of experience in a particular sector over time has given them better contacts, or from concentrating on one particular area they might have better contacts. Quality, I suppose dealers might have better quality again from maybe carrying multiple items and not just having to stick to an auction schedule. People have a perception that dealers have better quality on offer, and they can work with people on building collections over time rather than just taking whatever comes up at auction. Value, I think, is something that's not publicized at all, and I don't know why dealers don't make more of it, that they can often be a lot better value than buying at an auction house, not just in terms of commissions and prices and things, but in terms of the flexible terms that are offered. I mean, nearly all of the dealers I spoke to in this study, and I've spoken to since, offer very good terms to people that want to buy things over time, and things that you can take it away and you own it for a while and pay over installments. All these things that I think people are not aware of, or even buying things and swapping them in future. A few people have done that. So there's a lot of areas related to value that are not publicized. Longevity, I suppose, again, not being the kind of the hard sell and looking over the long-term depth in certain area. A lot of dealers offering services, kind of trust from personal relationships and having kind of full recourse. And I think low stress is a very big one, which I think sometimes the fairs, although they were very good to get that competitive energy, they kind of take away the aspect of kind of visiting a gallery, and it's a large, even for a big collector, it's a large infrequent purchase. It's not like going to buy milk and eggs in the store. It's something that you don't do very often, and it costs a lot of money, so you don't want to be rushed into it. It wants to be something that you can less pressured point of service, and I think that's especially if they give people the opportunity to take things home and things like that. It's just a much less stressful experience. It's interesting to see. I asked the collectors what was their main things that they saw were the disadvantages of dealers, and the top three ones for collectors were, the first one was prices and markups. Even though the fact that they might get something cheaper, there's a perception that you might get a bargain at auction that you'd never get a bargain from a dealer, and that's just a perception that they have. Now, whether it's true or false, it's just this idea that I think it's because it's a competitive thing. You think if you beat somebody, it must have been a bargain, or if you can find something, whereas dealers are too smart to have something that's not already marked up. Personal contact was, although it was one of the biggest advantages, it was also seen as a disadvantage, and a lot of collectors saying that dealers, they felt that they could put too much pressure on them to buy things, and also that they were very aware of dealers having a kind of a hierarchy of clients, and if they weren't, they had their most favorite people, people that were okay, and then if the bottom of the list, and obviously nobody wants to be on that bottom list, so they're very aware that these personal relationships, you like some people more than others, I guess, so collectors were aware of that. And the last thing was lack of transparency, I suppose, was not just related to prices and stuff, but related to how long they'd had something for, who'd seen it before them, that kind of thing that collectors would kind of be annoyed at. And I suppose lack of transparency, I want to finish with this on this note, is something that obviously is the bane of my life as well, trying to do these very large surveys, and I'm just launching my kind of TFAF survey for the year in the next week. And I mean, these are kind of anonymous surveys that dealers can fill. There's no connection made to their businesses, but it's still so difficult year on year to get people really supporting this kind of thing. People want to see the results, but they don't want to put in the legwork. And I mean, so it's these things that dealers can do something about. They really should work on. So this is my last slide. It's not really, it's a summary, but just these are the big things that I saw happening. Now, how these affect the market in future, we have to kind of a little bit wait and see. I'm very hesitant to predict too much, but obviously the size, the fact that it's more global, it's made the market as a whole. My vision of the market, when I'm looking at it from a macroeconomic point of view, it's done the market a lot of good in the fact that we won't get these more protracted recessions and things like that we saw in the early 90s, because it's a bigger, more global place. But it has made it more competitive at your level, at a dealer level. So the downside risk is very positive at the big level, but at the micro level there's more competition. This flight to safety is continuing, and obviously the certain aspects of the trade are changing, and I think the auction sector is probably changing a little bit faster than the dealer sector in many ways, despite besides the fair aspect to it. So I hope that's been helpful. Thank you. Yeah, if there's any questions or comments.
First of all, thanks for this impressive presentation. And watching to the figures you manage, we don't see Africa.
Yeah.
Is something to be considered for the future? Do you think, shall we somehow be focusing or paying attention on certain evolution in this context?
Yeah, I definitely think so. I mean, I'd have some African galleries in my survey now as well. I suppose that the auction sector there is very small, but and I mean, South Africa has been in the surveys for a number of years, but there's other African countries now coming in. I suppose it's another one of those ones. It's an emerging market where there's a lot of feeling about it and a lot of interesting things happen. So it's the same when I looked at Brazil and when I looked at India. I thought there's been so much in the media and things about these countries. There must be loads going on, but when you actually look at the value and volume of sales happening on the ground there, it's actually quite low, and it's still the price points are quite low. So it just doesn't register maybe in these big global macro studies where you're kind of it gets, I suppose, put into other rest of world and things like that because the value is currently low. But I think it's another one of those ones that is developing over time. But it's just because it doesn't feature in these doesn't mean there's not a lot of dynamism and things like that in the market itself. It's just that there's when you're putting together figures at this level, it doesn't necessarily register as it'd be less than 1% of sales, so it doesn't necessarily feature as a.
So might be also the fact that some of the business is actually done perhaps in
other places too.
UK or
in.
Yeah. Thank you.
Yeah.
Thanks, Claire. A few questions about your data, as I think it's important for people in the audience. I mean,
Sure.
You've basically become the market standard for this information. So I just had a few questions. One, the 3 billion number that you have for online sales feels, I mean, when I saw that when you published that data earlier, I mean, it's really substantial.
Yeah.
So can you talk a little bit about kind of where that's coming from and exactly how that was calculated? And then I think similarly, given a little bit what I was alluding to in my talk yesterday, and then Sylvain will be talking about the Chinese market next, maybe just talk a little bit about the process of how you've collected data in the Chinese market in particular, and some of basically what goes into that, because I think that that's probably on a short list of maybe 3 things that the international market is most focused on. Sure. Is sort of where that data is coming from is really, it's kind of China and the internet.
Yeah.
So just to talk to people about those things, because I think they're really crucial.
Okay. Just the online one first, and that's a figure I just came up with for it was somebody that was interested in doing it, so we worked on seeing what the figure for online selling was. Now this is sales of collectibles. So it includes coins, and it doesn't include cars because a lot of the car auctions online are just new cars, but it would include some vintage items and that. So it's first of all, it's quite a broad definition. But my definitions of the market as a whole are quite broad and encompassing. So I based it on what had been reported by auction houses. I put in obviously what they reported as to me in the surveys as their how much they were selling online. I also put in companies like Heritage as everything they sell online, and most of things like that. For the dealer sector, it was based on self-reporting from the dealers' surveys, and I think one issue that could be making this figure sound bigger than it was is that I asked dealers last year. I've changed the survey this year just because of this. I asked them how much do you sell online, and they gave me a figure of their breakdown of sales. I said how much do you sell privately, in your gallery, online, through domestic fairs, and through the same as that pie I showed. And I think dealers reported what they sold online, but I think they're probably including in that figure something that they might have sold based on a client that they had already, and they just sent them an image and they agreed to a sale. So what I've done this year in the survey is tried to break down how much was e-commerce that actually took place via your website with not much interaction from the physical presence. And I think that might, when we put it in that way, it might break down the figure a little bit more. And it's the same for the auction houses. It was how much had they sold online, and I suppose they probably in that included online bidding as well as online pure sales.
So you have data in there that's just from. So there's bids in there, but not necessarily consummated sale.
Well, no. I mean, it's up to it's kind of self-reporting for the auction house. So if they had, it's how much percentage of their sales that they sold online. So I've had to make it a lot more specific this year, and I don't think they put in what were bids. But I mean, it's not to say that they couldn't have put in if something had been sold on an online bid. Did they include that in their turnover? I've used the biggest definition, the widest definition. It could include somebody if they reported that.
And was this the first year that you put that number out there?
Yeah.
Did you have? Yeah.
Yeah.
Okay. So you don't have historical data.
Yeah. No,
Okay.
It's just the first year I did it. Just because somebody asked for it, I tried to. I mean, I came up with the figure first that was actually much lower, and then we worked on this figure based on getting more auction houses that they were working with and finding out how much they're doing. And there's a lot of, if you even go to the US, there's lots of auction companies doing a huge amount of sales online, and it's all bits and bobs. It's not the high end art stuff, but there's a lot of kind of mid and lower tier auction houses doing quite a lot of online sales regularly. There's certainly a lot of online companies in China also selling quite a large amount of things. There's a few big companies there that are just selling online. And again, it's not some of it. It's not verifiable whether it doesn't include some of the reproductions market. It's a little bit. I'm relying on what they report to me, and this kind of feeds into your next question of in China and the sales. Obviously, the auction data in China. I mean, I work with. There's two companies. I mean, I work with two companies to get the best data I can, and I work with obviously a U.S. company and a Chinese company to try and balance to see the two of them if they all balance up together. With the gallery sector in China, it's very problematic, and I'm taking a different approach again this year. I mean, I sent out a survey for the last 2 years to about 700 Chinese dealers and galleries in Hong Kong and Beijing, and it was the response rates were appalling. They were really, really low. I mean, I got a handful of responses, and I talked to quite a few people. It was really low. So what I actually now luckily have a Chinese researcher working for the company, and he's going around. What we found from talking to the galleries in person afterwards is they don't like responding anonymously to sales. So they're probably completely the opposite to anybody in this room. An anonymous survey online, you say, okay, I'll report what my figures are because nobody knows it's me. Whereas in China, they completely distrust the online medium. So he's going around now individually, getting with the survey form, getting dealers to do it individually and putting that together. And again, there's not that. I suppose there's not that many galleries in China. And there's a lot of individual dealers, so you have to do some assumptions about what they're turning over as well, based on talking to some of them and talking to experts in the market. But you do have to make a few leaps, but it's based on the best, most robust kind of research you can do. So the auction data is as it is. I think I'm pretty confident in it. I mean, there's all the issues that everyone brings up all the time about what about the things that didn't sell and things like that. But I mean, you can't go taking chunks out of the Chinese data and not do that from data you get in New York. There's things that people don't pay for 6 months in New York as well. So you couldn't. It's just things that are come down that are actually physically auctioned, and there was a winning bid. So it doesn't necessarily take account of things that weren't paid for in 6 months' time, and we've all seen that is an issue in China. People are paying late, and in some cases not paying at all. So that's the auction data, and the gallery data, as I said, is based on surveys. And now this poor researcher going around, going to all the galleries one by one and trying to get them to fill it in. And there's a new Beijing Art Dealers Association that are being extremely helpful to me. They're very hard to access, but once you get in to the network in there, they're actually extremely helpful. There's a lot of fears there's a lot of problems with tax avoidance in China as well. There's a lot of people not paying taxes at all, from artists to galleries to down the line. So once you can kind of relieve there. And I mean, I remember I went over after I'd published the TFAF thing that said that China was the #1 art market, and the guy from the Beijing Art Dealers Association was out to get me. He was saying, you've put all this focus on the gallery sector now the government's investigating everything. He's very kind of annoyed that it had been highlighted that there was this much money kind of circulating. But I think they are coming around to warming to the idea that this is an important thing for China to be recognized. So it's a very mixed methodological approach, but it's certainly... I do my best to make it as robust as possible. But it's based on a lot of assumptions.
Yes, going a little bit further on what Noah was just saying, you're talking about survey, but you're giving absolutely no information. You mentioned here that two of your very important data, and unfortunately the media are very cheapishly repeating everything you're saying because you're the only one that is supposed to give an informed opinion about it.
Yep.
But you give absolutely zero information about the breakdown of your survey, how many people you get answer from, what is the origin, the geographic origin.
Well, that's not true at all. I do give any information that anybody wants about the surveys.
I looked everywhere on internet. I looked everywhere on internet. There's no methodology.
No, I know you asked me this yesterday. I don't publish it on my website, but that doesn't mean it's not available for anybody that wants it.
Where?
And I used to actually publish some methodological appendices in the TFF report itself, and they didn't feel it was interesting content for the people that were reading it, so that's why they're not included. But I'm very open about my methodology, and I'm also very used to people taking pot shots at it because nobody's it's an area that people steer clear of because it's not an easy one to do. But I have a very straightforward approach. I mean, at the moment, the number of people I survey is about 7,500. The response rate varies between countries. I mean, at the moment, in some countries, it's over 50% for some smaller countries that are very engaged, and for some bigger countries, as I say, like China, the response rate last year was kind of nearly 3%, so it was very, very low. And it's a stratified survey, so it's not supposed to be a random sample. It is a stratified based on lists of dealers from associations and from fairs and from various things like that. And then you do have to take a leap to make estimates. You get a normal distribution of what the picture should look like for the entire population of dealers in a country and in a sector and in a region. And you have to make some estimates because you don't have the highest end dealers maybe don't answer your survey, and a lot of the ones at the lower end don't answer the survey either. So I probably have a very good representation in the middle chunk of dealers. But there's nothing to really hide. There's nothing to boast about my methodology because I wish the data was better. I wish I had more responses, and I wish that things were better. But there's nothing particularly secretive or about the methodology.
So you would be able to provide a document on this?
Yeah, sure.
Okay, good.
Hello, I have just a question. Well, thank you for your talk. I was very interested, you said about specialization, and I want to ask if you could give us some names of dealers or associations that are working very, very well, your point of view, in contemporary art, in specialization.
Well, I suppose this was based on results. I kind of talking to dealers from Sinoa, and they weren't all necessarily contemporary dealers, just that they'd specialized more over time. I suppose, a lot of dealers at the higher end in New York and places are very specialized. They work with, and I suppose many of dealers in contemporary art are specialized already. I don't know that I want to kind of mention one over the other that's doing particularly well, but what I meant by specialization was kind of working in smaller areas or maybe working at certain price points. Obviously, unfortunately, a lot of the people that are doing very well at the moment are people that have specialized in, the higher end of the post-war and contemporary market with kind of the kind of artists that have that historical footprint and that longevity that's kind of making them survive and stay very popular. But there is dealers doing very well. For example, again coming back to China, there's a very strong market in some contemporary galleries that are selling for less than $5,000 as well. So it's not necessarily all, they're not turning over as much money. They don't make a big impact on the big figures that I do, but they're doing very well as businesses. If you looked at their kind of profit figures and stuff, they're doing quite well. So it's just, I suppose, finding, again, looking at the market and finding what's not being served, rather than just completely focusing on what you'd like to do, and trying to find areas that actually there is demand for as well.
Thank you, Claire, for all these charts. One question. When we're looking at Asia, do you have data who you could say in which city the most business has been conducted? Like you were saying, it's still New York on the Western world, even the specialization, which all makes sense, everybody knows that. Mm-hmm. But do you have data about Asia? You know, there's this big discussion about Singapore, Hong Kong, Beijing.
Yeah.
Do you have anything, I mean, out of the 3% you mentioned, I mean, the return seems to be very, very low of the data in the Asian world you get.
Well, just for dealers or for
dealers, yeah.
Just for dealers. Well, it's probably more limited to given that. But I mean, in terms of the sales, you know, obviously it's still Beijing. If you look at sales in the art market as a whole, it would still be Beijing, which is kind of, it used to be Hong Kong, but now Beijing is a higher rate of sales in Hong Kong. Singapore and things like that I've been keeping a close eye on over the last few years because I think they were interesting, but the values there, based on even the kind of the handful of results I do get, and certainly what's happening in the auction sector, which is quite visible, they're not as big markets at all. And it was the same with India. When I looked at the market there, in kind of, this was a few years ago, we did a report for TFF on India and Russia and China, and were surprising, and the Emirates as well, and there were surprisingly low amount of actual sales taking place there. And again, it's some of these markets, I think there's an important gallery network, but the price points are quite low, so they don't necessarily, when you put them all together, they don't necessarily make such a huge turnover. So I think in terms of the high end, it's still, in terms of Asia, the leader would still be Beijing, as far as I am aware.
When you take in account all the Western galleries going to Hong Kong, do you think it's going to change? Are these figures going to change? Because, you know, in Hong Kong you have about 6 big guys now.
Yeah, and I mean, there's people making more. It's not as difficult to get into mainland China either as people originally was, and there's more people selling in mainland China as well. I mean, I do think that the kind of the buyer power is stronger on the mainland, and people will. But then again, we've seen the auction houses, we've seen Poly and China Guardian, and that realizing that they need a presence in Hong Kong also. So it obviously is a much more friendly, business-friendly place to work. So I think it'll be interesting to see. I'm not sure exactly what will happen there. It depends on how. I mean, the government is the mainland, the Beijing government especially, is very aware of trying to make Beijing a cultural hub, and they're doing a lot of things with galleries and things like that to try and make it more friendly for, kind of trade and promoting the business. So they're not going to just kind of give it up that easily. But I think it'll be always a balance of Hong Kong and Beijing. And I mean, the other areas, there's all kinds of interesting areas in Asia that are very important for buyers. Obviously, Indonesia and Taiwan is very important as well.
Thanks.
I have a very short question about Europe, because I think your statistics are a little bit weird from the perspective of contemporary art, but we understood that you are like speaking about a broader market.
Yeah.
If we really think about the contemporary art market, what would be for you the most important market in Europe? And what is the one which is growing the fastest? I think everybody is interested in this answer here.
Question, sure. I have to qualify what I call most important. It's not what I might feel is the most important in terms of interesting or important artistically or anything like that. I mean, the most important, the largest, in terms of the value of sales, is what I rank it as. So I don't mean to use that kind of slightly, definition of importance. But in terms of the value of sales, the UK is still the largest market for contemporary sales.
Contemporary sales, but I think from a gallery perspective, it's just you. I don't think any dealer would say the same thing.
Okay, well, just in terms of the evidence I have, I think it's the largest in terms of the value of sales. That's not necessarily the most important, and I don't think it necessarily has the largest number of businesses either. But I'd have to look at how the gallery sector breaks down in contemporary. It's not something I've kind of sliced up, but I think it's certainly where the highest value items are sold in Europe. But I mean, I'd have to look at my data in a different way. I suppose I've never analysed contemporary galleries and sliced it up in a European model. But it's certainly something I could do if there's interest in doing it.
I think we don't know so much about the market in Europe at the moment.
Yeah.
And we all try, I mean, there are lots of debates, but when we see your numbers, for instance, you show that Germany has less wealth than France, which is, I think, a little bit strange.
Less wealth than France?
Yeah, if we look at your numbers. And many dealers in Germany, all the dealers I'm speaking with, they always complain about the fact that their market is in recession. But still you have like a huge concentration of international dealers that you don't have in UK, for instance.
Well, that's the number of high net worth individuals. It's not necessarily the wealth they have. So Germany would probably be much wealthier. It's just the population, the numbers of population. Sorry, I was just trying to see which one you were referring to. Sorry, I missed the last bit. I'm sorry. What was the question at the end?
No, I'm just debating, or not. I don't want to debate. I just wanted to address some questions. Sure. I think you answered those questions. It's not my place to debate here.
Hello, Claire. Here. Hi. I want to ask you something totally different. You speak before about a business plan.
Yeah.
You know, I had a gallery and I deal with dealers, auctions, artists. And because we had a special product, unique art, sometimes it's really very difficult to follow because you had a price and in the auction go high and you cannot have this price, you know. So I'm interested to know how you can really be loyal to a business plan in a gallery and with art, you know, because so many changing, and that I think it's not a product like sugar or clothes, you know, it's a unique product, and that makes the difference also, and how it will be the key or a tip.
I do know what you mean, but I think it's something that, you know, a lot of small business, I mean, even I have to do it. I mean, it's very hard for me. In my business, I don't have any kind of, my clients change year to year, and, you know, I'm wondering who's going to be interested in research in the arts, you know, next year and things like that. So it's a difficult thing. But I mean, I suppose business planning is something that's supposed to be done periodically, and maybe it's something that needs to be done more you know, it's not something that you can do for 5 years, or you should have a longer term plan, but it's something it's supposed to be updated for. But I suppose it's not something that you necessarily even have to stick to. I mean, it's just the findings I found that nobody does any planning. And I think that the process in itself, even if you don't stick to the plan, the process can be quite, you know, sort of kind of cathartic or something, and just trying to see where you're at, see where you'd like to be going, and that kind of stuff. Because I know people are so busy just trying to keep the businesses afloat that it's very sometimes, you know, if you just have the process of looking at slightly more broadly about, you know, if this sector is not working, and if it's, you know, is it time to find out what might work better, and I know just even from yesterday, I feel very kind of like it's a very business school kind of attitude to have about dealers' businesses, and I know there's a lot more artistic motivations for it. But at the same time, they're you know, small businesses that have to work, or else they go under. So it's difficult, but it is something that I think that has to be regularly done, and it's just all about researching your areas and your buyers and seeing what works and what doesn't work. And it's probably something that people do in their heads, you know, every day. But I just mean that the formality of sitting down and saying, okay, I'm going to plan what's happening for the next 6 months to a year. And you probably have to do that anyway in terms of fairs and exhibitions and things like that anyway.
That will be a normal thing.
Yeah, that probably is a normal thing anyway, yeah. But I guess it's maybe if you can kind of ramp it up and do more research into where your pockets of revenues are going to be connected to those, and see at the end of the year, how does that break even? And I'm sure you probably do. I mean, I don't know. I don't run a gallery. I don't know how what kind of planning needs to be done, but I'm sure you probably do that anyway. You have to do that. But
yeah, it's to look like any business.
Yeah,
you know?
Yeah.
If not, you cannot do a
Yeah.
business
No,
plan.
I was surprised, because out of those, you know, there were 75 dealers. There's only one person said they did any kind of formal financial planning or business planning. But maybe they don't see that kind of thinking on their feet as business planning. But it's very difficult.
Yeah, of course. Okay, thank you.